welcome to the Asset Revolution podcast, where each week your hosts from Arbor Digital provide educational opportunities for financial advisors and individual investors to gain knowledge in this emerging powerhouse that is digital asset investing. The Asset Revolution podcast is your connection to the future of digital assets and an opportunity for anyone to get off zero.
Alrighty,
let's dive in.
Welcome back, everybody, to the latest edition of the Asset Revolution podcast. I am thoroughly happy, overjoyed to have my two guests for this week's episode. I have Paul Farella and Alexandra from Willow Investments, Willow Crypto, right? There's two delineations there. And before we have them and kind of introduce themselves, today we're going to get into a lot of really cool topics, like kind of a different focus than maybe what you've heard on the podcast so far. And I'll use that as the teaser. And then we're going to dive into some really practical things about how the journey into crypto looks and feels for an advisor and what you can kind of expect when you start getting into the weeds and the rabbit hole of crypto. So I hope that's a good enough teaser. Let's get into it. Alex, why don't you go ahead and kick us off first? Tell us a little bit about yourself.
Okay. First of all, I like cool things, so this should be fun. Thank you for saying we're going to get into some cool things. So I'm Alexandra Dest, and I am the CEO and founder of Willow. Willow has been in existence for 12 years. I have been in the investment industry managing money for a good 30 years, in the industry for 32, I don't even know anymore, 34 years actually. So managing money 32, and then doing compliance for the first 2 years of that time period. So I've been through a lot of different business cycles in this industry, and I am one who gets very excited by innovation, by lateral thinkers, by independent thinkers. I've seen a lot of investment ideas come and grow in the industry, and it excites me to see this excites me as much as the internet revolution excited me. So it's fun to be on this side of my career with this new innovation. So that's me. I co-manage the portfolios here with Paul. And so Paul also is one of our owners as well. So you want to talk about you?
Yeah, so I actually found Alexandra around 12 years ago, right before she started this business. I actually interned under her.
Yes. I didn't say I was a chief investment officer at a bank. That's right.
This was like right on the heels of the great financial crisis. So, being fresh out of college at the time, I was like, ooh, sweet, a job.
Yeah.
Yeah.
It was cool.
Yeah. But it was really interesting to start in the financial world at that time, because there was a lot of distrust in institutions, and to see how someone like Alexandra really catered her clients and really protected them during that time, to see this sort of juxtaposition of, wow, like people can really have an impact in a positive way through trust and through the relationships that they have, as opposed to I don't want to too broadly say the majority of the industry, but probably the majority of the industry that might not have been the most responsible with caretaking their clients and whatnot. So it was really, really nice to come into this industry during that time specifically. There's all the Occupy Wall Street movements, all those kind of things going on too, which, we can get into later how that sort of feeds into the whole, how we ended up in digital assets and why we're here. But a little bit more about me. I have 3 kids at home. My oldest is 6. She just started kindergarten. That's been a trip. My youngest is 7 weeks now. So
Yeah. You look very well rested for someone with a 7-week-old.
Yeah. I'm surprised my mind's took a lot of coffee, right? So that's
gotcha.
Yeah, no, he's falling asleep at his desk, but I'm only kidding.
See, we're getting the dirt out there. You can't hide.
Yeah. So I have my background in economics and finance, and then through a whole bunch of working with Alexandra, I was doing an operations type role, and it was not really my jam. So I went back to school and got my master's with a focus in sustainability. So it was an MBA with a focus in sustainable business. And it really sort of helped bring a bunch of ideas that I had into like a much more concrete way to approach triple bottom line thinking, people, profit, planet. How do you bring sort of like what we need in the future, present today, and then doing it through the investment world was like, ooh, wow, here's a really interesting way. And we were thinking of, the ESG stuff like over a decade ago.
Yeah, we were looking at farms. That's
yeah.
one of the reasons Paul came back when he went to school. We kept him part-time, and I said, if there's a job for him when he's done, he can come back. And at that time we were researching, literally putting a PE fund together to buy farms, organic farms.
Oh,
so so that's where it all started. At the roots, we're both very driven towards SRI, ESG, community focus. It's at our roots.
Okay, so it seems like that's woven into the fabric of Willow.
Absolutely.
And I'm really interested because now we're obviously here because you guys also have a crypto offering.
Yes,
and I think something that really positions you as unique to what's out there currently is this different way of approaching the industry and different way of approaching just even the traditional side. So I'd love for you guys to maybe just dive in really. So how did the journey of those things take you into crypto?
Okay, so really important that both Paul and I are lateral thinkers. So we don't, it's not that we intentionally want to be outside the box, but I don't always know if we know where the box is. Okay.
Okay, gotcha. Yeah.
And it's a unique, it's been it really is a great partnership for me to experience this in my career because, in my demographic, this is not typical. Okay, so the journey to crypto really, it piqued my interest. Paul started before me, 2016, right? Yeah. And, he started talking to me a little bit about it. And at that time, the company Willow, I wasn't Willow at the time, made the decision that I wanted to give every employee at the time some money to invest in cryptocurrency to get to know the space. That's how it really all started. And of course, over time, I'm not anywhere near this guy's got it going on. But I mean, come on. So, but I, continue to study it, and I'm very macro. So I know because I've been in the industry for so long when there's game changers. Okay. I was around for the internet when the internet started, and it was clear that the internet was a game changer in business. And it was clear as we went along and started to see how the functionality of digital assets, right? So that's
tell me a little bit about that, because when you say it was clear, because I think there's a lot of kind of hesitancy, whether it be because of regulatory framework. What were those clear things that you're kind of seeing that are similar to what you saw back in the internet stage?
Oh, this is great because there were so many naysayers about the internet back 20 years ago. And so many, I mean, even very famous, popular people were downgrading, under assessing what the internet could do. But as a user of the intranet internally within a company, and I saw how much it already was speeding up my process managing portfolios. So I was in the day where you're writing down every name and number of a client and the number of shares. And when we moved to technology, right, I'm a big adapter of technology. I may not be the best at it, but I always want to be there. And so, first one in the company to get a computer and then move it to an Excel spreadsheet. So, and then being able to electronically send that to the company as opposed to a scribbled piece of paper to the custodial firm. So I really had the benefit of not being afraid to see what possibly is underneath the cover, because I think that's actually what stops people from looking at this. When you don't know you're looking into a black box, you really don't want to even look in the box because you don't know what's going to be there. So I would say, the early days and what I saw on the internet and it being obvious to me then, and now knowing we're moving to robotics, we're moving to artificial intelligence, we're moving to more of an online platform. Everything is getting more automated. This only makes, to me, and this is maybe just because I'm lateral thinking, or maybe because I'm so far outside the box, to me, it's just it's obvious, right?
Yeah,
I would say.
There's I think Chris Dixon from A16Z has a quote where it's like Web 1.0 was read, web meaning like you could just internally read things. Web 2.0 is this idea of read write, where you can have forums and so what we think of as social media today, ways for people to do basic communications with each other. And then this idea of Web 3 is the read write own, where instead of these tech companies that really own all your data and you're just literally renting space from them and they can censor you at any point. They can take your account away. They can do whatever they want, really, with your data. You have no real ownership over it. This is a whole different model, like taking that a step further to say, oh, here's a way where now people can create content, create all these different kinds of things, and actually own it. It's like a whole new evolution. Right?
Yeah, it's an
the
evolution.
Next wave of how this technology plays out.
Here we advance. We are naturally going to strive as a human race for more advancement. So this is just yet another way in which we're advancing. It's natural to us.
Right. It's like, how does progress go? People want to get to whatever, whatever's the fastest, safest, and cheapest, right? So if you can maximize those three things, that's the natural direction that business is going to go in, to maximize, costs and speed and security. Yeah. And that's exactly what blockchains do.
So and I want to speak to that, because as somebody who's like on the older end of the spectrum here, I know a lot of people in my demographic are very skeptical, right? And I personally had to be convinced of the security of the system, right? And it was the same with the internet. I had to have some feeling towards the security of the system, right? Yeah. And I think that for I would say for anybody, but I would say the hesitancy, the fear that comes in for a lot of people is that specific piece, because the speed, that's obvious. We know we're moving faster.
Yeah.
Now, right, with everything. So that was the piece.
And I appreciate you diving into that a little bit more, because I feel a lot of people listening may be in that similar position, and your tangible story to help them say, oh, that is what we went through back then. It's easy to forget because it's so long ago, right? And for me, I was not in the stage to be able to do anything at that point. I was very young. So making that tangible is really important. We can learn from what we experience, or especially specifically what you experienced in this transformational technology that was the internet, and kind of you're seeing some similarities. Sorry, go ahead.
No, please.
Oh, no. So I was going to use that to transition to, so take that into now. So you're seeing all these similar things. This is a transformational technology from Web 1 to Web 2, and now we're heading into Web 3, right? I think that's where it's been a really cool thing that I've seen in the crypto industry this year specifically, is the conversation, maybe 2017 was blockchain, not Bitcoin, right? And then now it's morphing into, okay, blockchain is now enabling Web3. And now this idea of this transition to the new age of the internet is now helping people make that connection. Yes. So take us through now, how did Willow Crypto then become, is this how you approached building a crypto portfolio? Why did you even do it? Take us through now into actually forming and creating Willow Crypto.
Yeah, sure. So
I'll just go on the macro point. I don't like to be behind the curve. Okay. And when you started to actually see crypto, the digital space, actually, you're starting to see users, like real use.
Yeah. Network effects, right? Yeah.
I mean,
real communities, real dollars that go into these things.
Real money, bigger companies starting to, support this. I don't want to be left behind. So this, from a macro level, that's definitely, So go ahead, Paul.
And so how we got here as a firm was, we were really, I dove really deep in 2016. So when I read the Ethereum white paper, and it was just like all these light bulbs were going off, all these dots were being connected, and we're like, oh my God, this is going to be transformative in the world. And then since then, I was like, okay, how do we capitalize on this for our clients and find a way to provide them with some exposure to this? It doesn't need to be a lot, but they should at least have a little bit of exposure to this, because the potential that this whole industry has, right? And at the time, there was very limited options in what we could do, mostly exchange traded notes that were publicly listed. Accredited investors had more options, I guess, but for the bulk of our clients, we really only had a limited subset of what we could deal with to get exposure.
Without being a custodian.
Right, without being a custodian ourselves, right?
Yeah, which is, you don't want, what we didn't want.
Right, no, and that wasn't enough for us, right? So we then spent, the next year or two really researching what options are available, because at the time, there really wasn't any options for RIAs interviewed a few of the bigger digital asset custodians, and most of them had like really high minimums, or they required that you basically had a team that was going to build a bunch of the infrastructure out for you, which, we're an independent, smaller firm. We don't have the resources to spend hundreds of thousands of dollars on the development to make everything, talk how it should, and the proper APIs, all those kind of things. But then we found out, Bitria platform and them, which allowed us an option to say, okay, great. Now we can actually build a much more comprehensive digital asset portfolio that provides exposure to not just the big players in the space, but some of the emerging areas that we really see having wider impact and that are necessary, like some of the core infrastructure pieces, some scaling solutions, and then exposure to some of the like asset classes within, like the DeFi space and the metaverse and those kind of things. So
I really like infrastructure, but that's how I, early in the internet, that's really where I focused. A lot of my investments were in the infrastructure. So that's the first thing that caught my eye with digital assets. So,
right, like in the gold rush, right? Why mine for gold when you can sell the picks and shovels? And if you can own the store that's selling the picks and shovels, you're in a great spot.
The conversation really started with Paul and I want to say like a year and a half ago. How do we do this? So we just kept trying to figure out ways to do this. And then when we came across an option, that was it. We just said, we're doing it. There wasn't a question.
And take me through the thought process, because again, so I've been in this space less than you. I came to Arbor Digital in February, and I dove off the deep end. February 2021.
All right. Okay.
Is when I took the leap from traditional to just full crypto. And there was a 6-month learning and education. It sounds like, Paul, your deep dive was back in 2016. My deep dive was 2020. I mean, that was from March until, the end of the year and then after that, but anyway, I digress. So what was it that, because I think a lot of people, when we get some feedback, like, what was it? Because a lot of people may call it irresponsible, or what made it to where you felt that's, because you mentioned this before, the security piece. So what made it? Was it that you found this Bitria platform that had the security measures? What gave you that level of confidence that you could still do right by clients?
Okay. So number one, it's never a big portion of their assets, right? So that's number one.
Okay, we still determine suitability on a client by client basis. So we're not saying like everybody needs to go all in, but
just because
we love it.
Right? So all the same suitability is there, right? And when we discovered that we didn't have to be custodial agent, well, that was another piece of where I felt, a good level of security for our clients. But, the other piece of this is we make it very clear, you can lose everything. It's an emerging asset class. It's not yet regulated. So people have to enter this with their eyes wide open. There's all this potential, and then there's those risks as well. So we really
very clear about what those risks are.
Yeah.
And so, we have our compliance boxes checked. We have a proper qualified custodian who's housing these digital assets.
Talk to our attorney.
We talk to our attorneys. We have the proper through Bitria and the way that they interface with the custodian, the proper infrastructures in place in our mind that, keeps things how it's supposed to be. And then, well, thank you.
Yeah, and an expert. I mean, we have somebody who really understands the space extremely well.
I joke, I took my deep dive in 2016 and I've yet to emerge back out. If anything, I just keep going.
I don't know what sunlight looks like yet.
That's the thing.
Well, no, again, I really appreciate you dive into these little, they may seem like little things, but a lot of advisors, like, I don't know, you probably see this a lot, is like, there are these triggers, these moments where the aha moment happens. A lot of times they're rooted in kind of where we're diving into, right?
This is not unfamiliar territory to me. This is really where we were. I'm telling you, these same conversations took place in the internet at the beginning of the internet. The same conversation. None of this. It's like I feel like we put a repeat button on. Okay, and we're repeating literally the same conversations we had back then. Like, what's the security? What's the safety? What's the how is this going to change things? Is there really anything here? I mean, it's all the same conversation. And, and again, back then I didn't, I couldn't take large positions for clients, but I took pretty significant positions.
Yeah.
So,
okay. Well, again, thank you for diving into that. And when you say, again, making that tangible is really important. Again, that's why, already valuable for anybody listening here. So that way you can tell that story. And so take me now through, how does it align with kind of what you were doing on the traditional side now? So you got the tree, you were confident, you did all the work previous, and you were like, okay, we have the solution. So how did it fit in with what you were doing on the traditional side from, the ESG perspective or the sustainability, all that? So tell it, because that's a very different than how we approached it at Arbor Digital. So I'd love for you to kind of dive into this different approach that you all took.
Well, okay, I'm going to let him talk to it more, but I will say this, just so you know, like as Paul said earlier, you have ownership, right? So you have the capability to have ownership, which in and of itself is going to, be able to lay the platform for you to make a bigger difference. If that's the type of person you are, if you're focused on ESG, SRI, you can make a bigger difference by having that ownership.
Direct ownership. Yep.
Right. The direct ownership. So
yeah, I mean, I see the overlap here of ESG and crypto as like almost a perfect match. I mean, there's so many themes within each that they just perfectly complement each other due to the transparent nature of public blockchains, for one, where, you look at our current financial system, it's extremely opaque. You don't know what's going on behind the scenes, the vast majority of it. There's so many different intermediaries and people who are putting their hands in the pie, grabbing piece by piece. Whereas the infrastructure around different blockchains, it's all public. You can see how these things move. You can see what the actual fees are. You can dig into the actual code on how different contracts execute. There's a level of transparency that is just non-existent in our current structure.
I mean, there's a lot of financial engineering that takes place at publicly traded at companies. I mean, that's the bottom line. There is a lot of financial engineering. The transparency here is so much greater than what you have in publicly traded companies that are regulated, right? So, but like with anything, you have a propensity for good and you have the propensity for bad. I mean, you can use the internet for something bad, you can use it for something good. So the propensities.
Lots of arguments I've seen too. People try to paint, the blockchain in a negative light. And right, it's a tool, and people can use tools for really good things. They can also use tools for really bad things. So we're not trying to say it's like this, panacea for everything to save the world. But maybe it also could be used though as a tool to that effect too.
Yeah.
So then when you look at I guess one topic to talk about would be like the environmental impact of blockchains. There's a lot of misinformation that floats around out there. And I do realize that what I'm going to say might sound like whataboutism, but it's worth at least talking about so that we can have a framework for really to put it in perspective.
Absolutely.
Right? So when you look at how much energy proof of work, right, the consensus mechanism behind the majority of blockchains, Bitcoin, Ethereum, it uses something like anywhere from 0.5% to 1%, or consumes 0.5% to 1% of the world's energy. So that's a lot, right? So wow, this thing is consuming 1%, but what is it consuming that energy to do? And so this is where we need to have appropriate comparisons. You can't just say, oh, it's as much as a country, right? Well, let's look at these things as what they are, and arguably, they're digital economies, right? So you have this digital economy that is facilitating billions of dollars of transactions. There's organizations from things like DAOs and all these different code and things that are built on top of them. Businesses are built on top of them, right? It really is its own economy, right? So a proper comparison might be then to another country, right? So how does this digital economy compare to a physical economy out there? And so when we look at some of the different, so first off, the digital economy, how much renewable energy does it consume? Reports anywhere from 39 to 70% or so of that energy is from renewables. It's like, okay, it's great. Would like to see it higher. But then let's compare it to, say, the United States as a whole. 12% of energy consumed in the U.S. is from renewables. When you look at the different industries, if you say, okay, well, economies is too big, let's look at specific industries, transportation, manufacturing. They're anywhere from 6 to 12 or 13%. So
we could use this. I don't mean to interrupt, but we could use the same argument. How much energy are we using for cloud computing? And if we're creating efficiencies here, do we create so much efficiencies over time that we actually lessen the amount of energy by not running all these things in the background? I mean, we're running more effectively and efficiently.
Long way to get at ultimately when you look at the percent of energy that this technology is consuming, it's probably one of the most, it's literally like the greenest industry in the world in terms of green energy consumption, right? And where it's burning its energy from. So, yeah.
Oh, I was just going to say, just to add on to that. And so I'm happy we're going into this a little bit, because I think this is going to help inform a lot of advisors who may get that feedback is, oh, well, it's not environmentally safe. It uses up a lot of energy, all the fear, uncertainty, and doubt that you've mentioned that they're probably hearing. So this is probably arming them with things that they probably weren't thinking about. And another way that I guess we've thought about it too, and there's a ton of work that's being done and been done. It's is the power worth it, as well as another question you have to ask yourself, right? When you see a technology and an industry that moves as fast as well, it's like when you see like those numbers you just gave out about the percentage of renewable energy that it uses, that's only going to increase too. And it's increasing just like everything else in this industry exponentially, right? So when you look at the future and you say, what can create a better future for us, or the world, or, the US, whatever economies, you have to look at what can maneuver and be flexible and can do that. So, that's kind of another way we think about it.
Right. And then you look at, the shift of specifically Ethereum to proof of stake from proof of work is I think the numbers were something like 30 to 40% of all the electricity used goes to Ethereum, right? That is having a net reduction of 99.95% in its energy consumed once it switches to proof of stake. So,
wow.
That's fantastic.
The argument goes away.
Yeah. And thank you for highlighting then the next thing that's just for proof of work, right? And that's just, and I don't think Bitcoin is ever going to move from proof of work. There may be a fork or a layer 2 built on top of it that will not use proof of work. But when you see all these other projects and protocols, these base layers that are now getting into these greener and more efficient and more energy friendly consensus mechanisms, it's like you don't have to do everything that one way. And I think it's an important piece to understand, that the evolution of the industry itself is moving away from proof of work. And there's so many different proof of and consensus mechanisms that are being tested and tried. So thank you for highlighting that too, the proof of stake versus proof of work.
Yeah. And then I guess the last piece on how, well, not the last piece, but when you look at the S&G, right, the social and governance side of ESG, how do they really fit into blockchains? You look at DAOs and decentralized autonomous organizations, and really what this whole technology presents is a new way for people to organize, coordinate, raise funds, and then deploy those funds. So it's completely different than nonprofits, NGOs, corporations, and how they go about sort of forming around an idea or a mission and then implementing their strategy to achieve their goals. It's an entirely new way to approach it that has no borders. Anybody can be a part of these DAOs. There is zero discrimination that happens. You just basically need an internet connection, and you can sign up. Find a DAO, you support their ideas, submit what you can, either your time, money, or really physical effort. There's all sorts of really amazing projects and interesting things that are being done in that space that really change governance structures and
in the art world. And when I'm looking at the art world, there'll be more transparency to certain areas where there's not been transparency. I'm thinking about art, not a lot of transparency.
Across the board, different ways to approach that, bring in a whole bunch more transparency too. And then you look at something like MakerDAO has a proposal that they have about clean money and the idea of how they can pivot themselves. And they have there's a really amazing article. So it's worth reading that they've posted, but it's the idea of basically when you have a loan or something that you're going to issue someone a loan, the collateral that you use to back that loan should be producing, renewable energy or from regenerative sources or some type of green thing. So you can literally build these entirely new models around money and what backs that money. So it's really fascinating in that aspect.
And real quick, but just so for everyone, I know what MakerDAO is, but there's a lot of people who probably don't. Can you just real quick go through what MakerDAO is, just very quick, high level?
Yeah, high level, they're like one of the OGs of DeFi. They decentralized finance, right? Basically, they created the DAI stablecoin. They sort of pioneered that whole space, which is a stablecoin that's traded on the blockchain. It has algorithmic tie back to whatever its underlying assets are. That ideally represents one, right?
Yeah. No, thank you for doing that. Yeah, MakerDAO is one of the projects that we are also familiar with and invest in through the portfolio. Very cool what they do, and it's very different than maybe an Aave or a Compound, and then what these other stable coins are that are pegged to a fiat or some other real world asset like gold. DAI does not get talked about quite a lot, and that's because it's baby steps, right? DAI is a whole nother ball game, and man, when advisors get caught up on algorithmic stable coins and what they represent, what they could possibly do, minds are going to get blown. And MakerDAO is a really cool system because that's where all that experimentation is happening.
Give it a couple years.
Yeah, it's like if people can see this in practicality, in practical motion, and actually see it, then it becomes reality. And that's what you saw with the internet. So if we could, somehow show advisors exactly what's happening behind the scenes, I think they would be more apt to be able to adopt this.
Yeah.
And one more example I think worth pointing out around the social aspect is Constitution DAO, which I'm sure you've probably heard about, where literally it was like one of the fastest overnight fundraisers. They are, within 3 days or something, raised $40 million to purchase a copy of one of the original copies of the U.S. Constitution that was up for auction. But just the fact that they ultimately lost, but just the fact that people were able to come together and do that in such a short period of time, I don't think you can do that without this infrastructure, without this technology existing. That wouldn't have been possible. So that's just like a touch of what is to come, or what this technology really unlocks, and how it provides this huge social benefit to people.
Yeah, and again, I think one of the valuable things about this conversation so far too is that if you just looked at headlines, right? If I was an advisor sitting in my seat and I just went to Barron's and I went to riabiz.com and all these other traditional media outlets, you're going to see crypto is environmentally unfriendly, right? Like it uses up this, it uses up that, and all you would see would be that FUD, and you wouldn't really go past just, okay, there's the E, but then there's the S and the G in ESG, right? You can't forget about those two. And not even just, solving for all the things that we talked about on the environmental standpoint, just going into those examples through the social and the governance pieces, I think is really tangible for advisors listening right now, so they can have a broader and probably more intelligent conversation with clients who maybe do bring up those headlines in that FUD, right?
Yeah, and that should be caveated to, the current infrastructure for DAOs it's still really early. So a lot of this stuff is people experimenting and seeing what works, what doesn't work, what kind of tooling still needs to be built out in order for these things to really reach like maximum efficiency. So it's still early, it's still being developed. But if you can sort of step back and look at, okay, there's all these little things going on, but the bigger picture here is that this is happening and it's going in this direction, and the impact that this will have will be huge.
Yeah. Oh man. And take me through some of the feedback maybe you've gotten from clients. Like, how has it been implementing this for your clients? Have you gotten pushback? How have the conversations been?
At first, I I'd say at first it was a little bit of a pushback. We knew who we needed to contact. I mean, that was pretty clear to us, some people who, think progressively. But now as it's gaining a little bit more, I would say, press and becoming an everyday conversation, more and more people are interested. So now everyone wants to have a piece. It's just whether we do it through the exchange traded notes or whether we actually do it through individually buying the digital assets. But I'd say most clients are pretty aware of it now. And we obviously talk about it a lot because it's, one of Paul and I's favorite. We can't call it an asset class because it's not an asset yet, but we happen to believe in it. Let's put it that way.
And I would just add, our clients trust us.
Yeah,
and, they look to us to say, wow, you guys have spent the time, you've done the work, you've done, put the energy into understanding what's going on in the space. So they see that we get excited about it. They see that we have the, the knowledge and the research to back it up. And we also do a big push on education too, where we offer to our clients, we try to keep a monthly webinar going where we, are always asking for feedback and always asking for questions so we can, get to the root of these things and answer whatever they need to know about this space.
Yeah, leading with education is really important. When we have conversations with advisors or clients, and the first thing always starts with, hey, before we do anything, we're going to educate you a little bit. And we just want to make you aware first, right? Like when we brought this to clients first, it's always like, hey, are you aware of this? Yes or no? No. Okay, great. Well, here's what this is. Here's how we're thinking about implementing. I'm going to give you some things to go read, and we're going to come back and we're going to talk about it a little bit more and see if it might fit within, kind of how you go. And then, we have this thing, then we want to implement this for you. But before we do that, we want to make sure you're comfortable with it and you kind of understand it a little bit more. Because one of the things we talk about this internally all the time, is we feel that crypto and crypto investors right now, like one thing that's never happened is where clients are the ones that may know more about crypto and digital assets than the advisors in the broader sense, right?
Yeah.
So you have to be very careful with how you bring it to clients, right? You can't, if you're unprepared, you may run into a client that says, well, I've actually been doing this for 4 years now. I have a little Ethereum that I've been going, I've actually been participating quite a bit. And you may put yourself in that. So education is so important. So I love that you lead with that. And do you feel that empowers the clients a little bit more too, to make that decision?
I would say yes, but at the end of the day, they don't really trust our direction. And that's definitely what I find more than, because even with the education, the concept, unless you're actually putting it into practical purposes and practical use, it's still hard for them to wrap their mind around it fully. So until you turn the key inside the car and now it runs, and you don't need to know how the engine works, right? Until you actually have that practical experience, you really don't know the utility. And I think that's where we're coming to. I think we're coming to where the utility will become a little bit more mainstream over the next couple of years. And that's when I think you'll see a broader movement towards it.
So are you suggesting that advisors, they should get their own private or public keys to the car and then go turn it on and try to do it themselves? Do you think they should do that a little bit?
I think the advisors should start to learn about it themselves. I no question about that. I think, just like the internet, you have to pay attention to what's going on here.
Yeah.
I think you could be left behind if you don't. Really.
Absolutely. And then I think I'm going to take it back to kind of the things that you both have said, is that, so Alex, for you, is that deep dive that you did back in that internet age when you saw this transformational technology coming in. Paul, in 2016, you took that deep dive. It seems like that's the consistent thing between all professionals.
It's fun to watch somebody my age doing the same thing. It's great.
Right?
Yeah.
It probably makes you think like, oh, I remember when I did that. There you go.
It's funny. Yeah. Because I was excited. I'd love to see the enthusiasm. I'm now very macro oriented and he's so micro, right? He's so into the details. And that's where I was back then, because nobody was really in my sphere was looking at it, right? So yeah, so it's exciting to watch that.
It's fun too.
Yeah.
Yeah.
It's fun.
Things move so fast in the crypto space that it's like, wow, there's always something new and always something fascinating.
Yeah. So to the advisors, if they're listening to this, and probably you have a lot in my demographic, I know it's just about progress and we're in that, we're there. This is happening. Artificial intelligence, automation, it's happening. So this is one place where I think you have to really pay attention here.
Okay. Well, thank you for saying that. And maybe this is a good way now to start talking about, because you just mentioned it, Paul's, things move so fast here, right? So I feel like new technology within this new technology is being developed every day. AMM, automated market maker technology, variations of that, new consensus mechanisms, new base layer blockchains that's going to, instead of 10,000 transactions per second, it's going to be 100,000 and so on and so on. You just never know. So it's hard to keep up, but maybe I would love to hear for you guys. What are you kind of excited? What are you saying past kind of where we're at now, just to kind of give us a sense of what are you saying is maybe some exciting things that are coming that we haven't even begun to think about?
He's gonna know.
Yeah.
That's a
Well, no, this is good because the modularization of blockchains is something to pay very close attention to. For one, where the perfect example is, and I don't know if you're familiar with the Bankless podcast, but shout out to those guys because they do a fantastic job. But the idea is that you look at how AMD came out of nowhere, the microchip company.
Processors,
came out of nowhere and then basically ate Intel's lunch. Intel had this, what was considered a monolithic chip, where everything was done on the chip. Intel came and sort of broke apart the pieces to say, how can we find maximum efficiency within each piece, and then sort of put it together. And that allowed them to scale and create a much, much more superior product. And so what I believe we're going to see down the road is the separation of the security layer, the data availability layer, and the execution layer. And so within each of those three sort of modules, because you put the three together, and that's sort of like the crypto trilemma, where you have to sacrifice on one essentially to the benefit of the other two. So you have certain blockchains that don't worry so much about being decentralized or their security, and instead focused on speed and data availability or something like that.
And so real quick, for those listening and I'm sorry to interrupt you, Paul, but for those listening who may not know what he meant by the crypto trilemma, that's kind of that blockchain trilemma right now with the technology, where you have these three pillars to the triangle, which is scalability, security, and decentralization. And right now, the dilemma is that no one's been able to build a blockchain that can do all three at peak efficiency, right? You have to sacrifice one of those.
Sacrificing one.
Yeah, exactly. So just for people who may not know what that is.
And so breaking it apart into this modular approach instead of this monolithic approach, where you're trying to do all three of those things on the layer one, might solve that trilemma. To be determined, but that's the direction. That's the direction it looks like it's going, which is super exciting.
So you guys talk all these terms, and a lot of people don't even know what layer one. Layer one is Ethereum. Okay, so I'm
things like Ethereum, Bitcoin,
okay?
The Solanas, Cardanas, those are like the layer one blockchains.
Yeah, and what Paul's talking about is going to layer two to do all the processing. So now you have the speed, and then you can secure it with the layer one.
So another exciting thing to pay attention is these layer twos, these execution things, these different companies that are working on, instead of processing, however many transactions, 10 to 50 or whatever it is, they could do literally potentially hundreds of thousands. So that's a game changer. And that's like happening sort of now. It's actually already started happening. So we're going to see that really blow up, I think, over the next several months to a year. Another really
blow up wrong term.
Not blow up like destroy, but blow up like get really big.
Be careful when you say those words on a podcast.
Gotta be careful. Yeah, sorry about that. The other really exciting things are there's been a lot of talk and a lot of hype around NFTs, and really we've only seen like the base use case of what NFTs can be used for, which is like
art and collectibles, right?
And stuff. But most people aren't talking about how this can go so much further than that, where you have like the tokenization of something like your house, which is a unique. So there's only, first off, let me back up, right? There's only two things in this world. It's either fungible or it's non-fungible, right? It's either you can exchange it, it's fungible, anybody can, a dollar is a dollar is a dollar, or it's non-fungible, it has unique properties, right? So your house could theoretically be an NFT if you put it on, tokenize it and put it on the blockchain. So there's this whole financialization of things that's going to happen around that with NFTs that's really just starting. We haven't really seen that really come too much into the common discourse.
Crazy. It gives a lot of power to the individual. Really, it does. It's without the middleman.
Yeah, we couldn't agree more, especially on the NFT front, right?
Yeah.
When you talk about NFTs, the way we kind of explain it to people too is like there's productive assets and there's unproductive assets. NFTs are the key to creating productive assets out of those unproductive assets. So you gave the house example, right? Like imagine what you could do if you put that as an NFT on and created a smart contract around that. And okay, maybe I'm going too far right now for people.
No, go for it. This is fun.
But yeah, so we get excited about that because then you're talking about an entirely different way that you can build your financial life. And when you talk about being a financial advisor, and you're going to start with these next generation of investors, workers, so I'm here in Austin, Texas. So their UT has a program and they have their first generation of PhD students coming out that specifically focused on blockchain and the technology and the entire technology. So when they get out of college, they're not going to sit there and want to go into that job that's going to go into that, older company that's not focusing on blockchain or building for the future, because they know that's what they've lived in, right?
Impossible. Yeah.
So, and then beyond that, they're going to understand like, oh, I can actually do this with my assets because I understand how the technology works. And so well, go ahead.
So for other people, explain that through so that people listening can understand your logic. Why wouldn't you put your house on the blockchain, on the NFT? Why would you do that? What would that do for you?
Yeah, so a few different things. One, it takes away the intermediaries, right? So it makes that process efficient, right? So, I mean, the consumers, and like we've mentioned many times on this before, fully transparent and proof of ownership, right? Think about before the one thing. So I was on a real estate podcast a webinar before, and when they were talking about, think about the security measures that making your real estate as an NFT is going to introduce. There's going to be, you can't scam. You can't do anything. There's going to be no fraud. It's going to be non-existent. So when you think about just those types of efficiencies too, just proof of ownership and property rights, I mean, it's hard not to get excited about it, right? And then you take that beyond then to those other use cases, putting it as an NFT, and then you can fractionalize then the ownership of your house, right? Like you can actually get investors in your house. Like right now I'm sitting in my house. If I wanted someone to take advantage of all the exponential growth that our house is has experienced here in Austin, I could have had 10 people also experiencing that with me if they were investors in my house that was on the blockchain, right? Like how cool is that? But I hope that it's, thank you for making me dive deeper on that. Cause
I wanted you to, because I get it, but other people out there just, may not. It cuts out, like if you go to sell that home and it's on an NFT and you have proof of ownership, what happens to title searches? I mean, this could change so much in the law industry even. And this is what, I say often to our attorney clients, like, you need to pay attention because this is going to change your industry. Okay, these are all the potentials. So so thank you for taking a little bit of a dive there.
Yeah, absolutely. Well, I'm fired up now, and I hope everyone else is fired up with us, because I know y'all are fired
up.
So It's been so fun. I wish we could do this for another 2 hours because I feel like we could.
We don't want to bore everybody.
but it would be so easy because there's so much happening in this space. There's so much development that we could easily fill another 2 hours because there's just so many things to talk about, so many exciting things in this space.
Well,
it's great.
Well, I have to say thank you because I think it's also a little interesting, right? Like if we were in the traditional world right now, you're a crypto digital asset SMA provider. We're a crypto digital asset SMA advisor as Arbor Digital. A lot of people would think, aren't they competitors? Why would they be doing on each other's podcast? And one of the things we are very excited about is the idea of decentralization, but just the ethos of crypto and digital assets is it's changing the way we think about competition and how right now we are so early. There's enough for everybody. In fact, we want more people. There's
always enough for everybody, even in the traditional space. I mean, people have to change their thinking.
And really, competition's a good thing. People always frame it as like a bad thing, but competition's a good thing because it means there's demand for something.
Absolutely. And so that's where, I know what it takes to say yes to coming onto a competitor's podcast. So thank you so much. I hope we're kind of rewiring people's brains a little bit to think about as you start diving into the digital asset space.
Yeah, It's a total pleasure. We're happy to do it. Yeah.
Oh, man. Well, real quick, before we adjourn for today, give the audience, where can people find you? You mentioned some webinars you guys do on a monthly basis. Tell some people about that.
Sure. So our website is investwithwillow.com. You can go there and you'll see that we have a little space if you wanted to click into crypto or if you wanted to go with traditional assets.
We
also have the other website, willowcrypto.com.
Oh, yeah.
Specific to the SMA.
Yeah, but we can link over to, they're both there. And we're located in Western Mass, but we work everywhere, as all of us do now.
Wonderful. Well, you heard it there. Be sure to go check them out. Very important work they're doing. You won't come away disappointed. Alex, Paul, thank you so much again for doing this. I can't wait to have you all back on.
Yeah, well, we have fun. Thank you.
All right. Thanks, everybody, and we'll see you next time.
All right, ciao.
We appreciate you listening to this edition of the Asset Revolution podcast. I'm your host, Marc Nichols. Please don't forget to let us know how you like the show by rating and reviewing us on Apple Podcasts or wherever you like to listen. For more downloadable digital asset resources and educational opportunities, please visit us at arbordigital.io. We are here to help you get off zero safely and securely. Thanks again for tuning in, and be sure to tell someone you care about them. Cheers.
We are financial advisors. However, we are not your financial advisor, unless you're under contract with or actively speaking with Arbor Capital Management or Arbor Digital, a division of Arbor Capital Management. This podcast is just that, a podcast. It is not financial, legal, or